Armenia's economy is growing, but its central bank is warning that the engine driving that growth may be starting to sputter. Armenia has been one of the stronger performers in its region over the past several years. Rising trade activity, remittances, and an influx of businesses and workers relocating from elsewhere in the Caucasus all helped fuel that momentum. The numbers looked good, but the country's central bank is now flagging a risk that does not show up clearly in the headline figures: weakness in the export sector. For a small, open economy like Armenia's, exports are not just one piece of the puzzle. They are central to how the whole economy holds together. When demand from trading partners softens, or when a country's goods become less competitive because of a stronger currency, rising production costs, or shifting trade routes, the effects spread fast. Jobs take a hit, business investment slows, government revenues come under pressure. That is the dynamic Armenian policymakers are watching right now. Growth remains solid on the surface, but the external trade picture is becoming more complicated, and the central bank appears to be taking it seriously. This creates a difficult position for any central bank in a small, export-dependent economy. Strong domestic activity might argue for keeping interest rates elevated, a tool central banks use to keep inflation under control. But if export revenues are softening, raising or holding rates too high risks slowing down the parts of the economy that most need breathing room. It is a balancing act with no easy answer. Armenia's growth story in recent years was partly built on its role as a trade corridor, a bridge between markets. That position brought real benefits. It also brought exposure to forces outside Yerevan's control. Shifts in regional trade flows, decisions made in other capitals, and global demand conditions all feed directly into Armenia's economic performance. The central bank cannot manage those variables, it can only watch them and respond. The signal coming out of Yerevan now is one of caution. Not alarm, but caution. Policymakers are not abandoning an optimistic outlook. They are acknowledging that the conditions supporting recent growth are not guaranteed to hold, and that the export sector, in particular, needs to be watched closely over the coming quarters. For investors and analysts tracking frontier and emerging market economies across the Caucasus and Central Asia, that is a meaningful signal. Uneven global trade conditions are creating pressure points across many smaller economies right now. Armenia is one of the clearer examples of a country where strong headline growth and underlying external risk are sitting side by side. Watch how the export data develops. That will tell the real story about whether Armenia's growth is built to last. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.